So when markets are choppy, markets are volatile, and in the near term things are looking uncertain, time to really seek advice from one of the smartest trader on the street, Atul Suri of Rare Enterprises. Atul, what a delight to have you back on ET Now. Thank you for joining us. First, dissect the market activity for us. In last 3 days, Sensex is down 1,000 points. Nifty has taken a knock off over 300 points. Do you think that is scary?
No, I don't think so. The reason is, Nikunj, that if you take a longer view of the market, let's say I go back to a year and a half, 6,300 has been a very major top for us. This was on, I think, 5th of November 2010. And for almost 13 months, what we've had is classically, as a technical analyst would look at it as lower tops and lower bottoms, which is classic Dow theory, and which is the formation, and which is in a very, very, sort of orderly parallel channel that there was. This market really bottomed out in recent times at around 4,500, I think on 20th of December 2011. And after that, Nikunj, what I saw was that we went out and made a higher top. See, we had not made a higher top for almost 13 months. And we made, I think, a higher top, I would say, at beyond 5,100. Some may like to say even beyond 5,400. But what's more important is that channel down move that there was, that lower bottom, lower top kind of scenario that was broken out beyond this 51, 5,400. What it also did was took out the 200-day DMA. And what we also saw was that apart from just India, because we don't live in a vacuum, and foreign flows are, I think, the single most largest factor in the short to medium term, we found that there's this real flush of liquidity that we saw. I mean, Jan had record liquidity flows. 15 days of Feb had equivalent to almost all of Jan. So we saw a very big surge.
I will just react to the data. I don't know if you can see that, but in this calendar year, oil is up 9%, gold is up 13%, S&P is up 9%, Sensex is up 20%. So I guess it's a global risk-on trade, isn't it? All asset prices, irrespective of the correlation, irrespective of basic fundamentals, they are moving up in a synchronized manner.
Absolutely. I mean, you've really hit the nail on the head. Nikunj, the fact is that, there are these traditional thought processes of intermarket analysis, which says that when the currency goes down, the commodities go up, equity goes down. But really the market teaches us new things and always finds new ways of doing things. And today I think the single most one factor that you look at is you look at currency. You look at the dollar. I mean, I for one really follow the dollar index very closely in the short to medium term, because for me it gives a very good indication of the risk on risk off trade. What you're seeing is not just in India but globally, the weakening currency or the weakening dollar has led to moves in commodities. You've seen crude do wonders. You've seen gold do wonders. This is the best, I think, Jan-Feb we've had in gold for many years. And at the same time, surprising most people is equities. And the beauty is that with equities, for all its price performance, there are equal or more number of people who are doubting Thomases. So what you say, the wall of worry that is there. And as George Soros very well put it, that bull markets are built on walls of worries. So at Dow at new highs, Nasdaq at 12-year highs, for all these positive price movements and money that people are making on the long side, there is such a large school of thought which thinks that this is not true, this is not right. So the risk on trade is global, and I think that is one way of really explaining the kind of things that are happening globally. Otherwise, traditional thought processes, I think, are struggling a bit at the moment to justify this kind of rally.